Okay, so hi guys, how are we all doing today? I hope we're all having a very wonderful weekend. So, like I already put out there, we're going to be having a session this evening, and then just like all our sessions, we'll be looking to achieve something tangible today. Do you understand? Last session we basically did top-down analysis. We looked at what time frames to use and then what to use them for. Do you get? It's one problem a lot of traders actually like suffer with. So today we're actually going to be decoding another thing, which is market structure. This is another problem that a lot of traders suffer with. Even I sort of struggled with it for a very long time before I started understanding it, and then I started understanding how to implement it also. Do you understand? There were times where I would sit on my chart and then I would look at my chart for long. I wouldn't know what to do exactly. Do you understand? So, like I said, the topic we're going to be looking at today is what? Market structure. Market structure. So, before we get started, I just want to put this question out there. How many of us are in that stage where when we come to the market, we still wonder what to do exactly? Do you understand? Like, okay, how do I know when to buy or how do I know when to sell? Anybody, if there's anyone, just indicate in the comment section. Okay, okay, okay. Any other person I've seen and/or indication? Any other person? Okay, since it's only annual, then I think that makes our work. Okay, okay, we have a couple of people. I wanted to say that makes our work this evening easy because if you can actually figure out what to do, then it means you understand market structure. But it seems we still have a lot of work to do. So we're going to be taking it calm, calm. Do you understand? So here's the thing. Most of us already have that whole idea that this whole chart here, this whole candlesticks up and down movement are supposed to give me an idea of when I'm supposed to buy or when I'm supposed to sell. Do you understand? Now, the question now becomes how. I don't know if you guys are following what I'm saying. The question now becomes how. It becomes, okay, how do I know that now as AUD USD is forming like this, should I buy or should I sell? That fundamental question is answered by market structure. Hope you guys are following. So now, what's market structure? Since it's the key to identifying this thing, what's market structure? Market structure, by definition, is more or less how price moves or how the market moves. Do you understand? It's more or less from this movement of the market that we get to know that at this point, you are supposed to be leaning towards buys. At this point, you are supposed to be leaning towards sells. So it's more or less like that compass that gives us a direction in the market. Do you get? So we're more or less trying to use it to figure out which direction price is headed towards. So from this direction price is headed towards, we get to know whether this direction will favor buys or this direction will favor sells. Now, when it comes to this market structure, yeah, we have three of them. That's to say that at any point in time you come to the market, you'd see the market moving in one of these three ways. Now, listen to that statement again. At any point you come to the market, you see that price will be moving in one of these three ways. I'm not saying it's going to be moving in all of these three ways. Now, if you go back, you might see all those other ways. Do you understand? But then at any point in time, in that moment, price is going to be moving in one of these three ways. Now, what are those three ways? We have first an uptrend, a downtrend, and then a ranging market. A ranging market. Now, an uptrend can also be called a bullish market. A downtrend can be called a bearish market. And then a ranging market can also be called a consolidation. Now, here's the thing. What we're going to be looking at today, first of all, is what these types of movements are. Do you understand what they look like? And then how we basically use them in our trading. Do you understand? So we're going to be looking at what they are, what they look like, that's identifying them, and then how to use it in our trading. So we'll start with an uptrend. Now, before we get into this whole uptrend, yeah, no matter the market movement or no matter the direction price is headed towards, price will never move in that direction in a straight line. Do you understand? So let's say price wants to move to the upside. Price is never just going to start and then move to the upside immediately. Do you understand? Except maybe in conditions where we have high impact news events where prices just spike. But then even in that spike, if you look at it at a macro level, you'd see that price will be doing, it will more or less be a progressive movement. If you look at this whole movement, if you look at this market now, this whole AUD USD charts, you see that overall price has been going to the upside. I don't know if you guys can see that price has been going to the upside. Now, here's the thing. You can see that inside this whole movement to the upside, price is not just moving in a straight line. Price is moving up and down. Do you understand? So what are these up and down movements? These are impulsive moves and then retracements. So no matter the direction price is headed towards, price will always move in impulsive moves and then retracements. Impulsive moves and then retracements. Impulsive moves and then retracements. So now, what are these impulsive moves and retracements? Impulsive moves are more or less moves in the direction of the trend. It's okay. Moves in the direction of the trend. Do you understand? And then they are stronger, or you can say stronger moves in the direction of the trend. And then retracements, on the other hand, are weak short-term moves. Weak short-term. Instead of short-term, you can also say temporal. Weak short-term moves against the trend. Weak short-term moves against the trend. One sec. Weak short-term moves against the trend. Are you guys with me? If you guys are following, please, I want to see in the comments section. You can just indicate with an emoji. Yeah, so I know you guys are with me. Let's not be that I'm talking to myself. Okay. I can see you guys are with me. Good, let's proceed. So now, as I was saying here, no matter the direction of the market, price will always move in impulsive moves and then retracements. Do you understand? So whether it's headed to the upside, to the downside, whatever direction at all, price will always move in series of impulsive moves and then retracements. And like I said, what we're going to look at now is what an uptrend. So to more or less decipher what an uptrend looks like, we need to actually understand these impulsive moves and then retracements. So now, an uptrend, it's more or less a market where price is moving to the upside, just like the name sounds. It's a market where price is moving to the upside. But then here's the thing. We said that price will never move in a straight line. Price will always move in a series of impulsive moves and then retracements. Are you guys with me? Price will always move in a series of impulsive moves and then retracements. So now, how does this work? An impulsive move is more or less a move in the direction of the trend. So we're going to have a move in the direction of the trend. In an uptrend is what? To the upside. So a move in the direction of the trend to the upside. After that, we're going to have a small move or a short-term move against the trend. So against the trend, impulsive, retracement, impulsive, retracement, impulsive. Are you guys with me?
Yes.
Good. So now this series of impulsive moves and retracement basically creates a series of higher highs and then higher lows. Higher highs and then higher lows. So higher high and then higher lows. See? So higher high. So this is basically what an uptrend looks like. Overall, we're more or less progressing to the upside, but then we're having those small moves to the downside in between. Do you understand? It's more or less like you're taking 2 steps forward, 1 step backward, but then overall, you're going to be going in that forward direction. You guys get the idea? So here's the thing. This uptrend now, like we said, we're going to be looking at, first of all, what it looks like, or what is it, what it looks like, that's identifying it, and then what to use it for. So now we're finished looking at what is it. Do you get? We're more or less in what it looks like now. Now, how to identify it now? There are certain key things we need to understand about an uptrend. The first thing is that an uptrend is a market where we're looking to buy. Do you get? If you look at this, overall price is going to the upside. Do you get? So even if I buy at this point where price starts going to the downside, as long as this continues as an uptrend, at some point I'm going to what? Get back into profits. Do you understand? But then that's not how we do it. You don't start buying at the higher highs. We're going to look into where we're supposed to buy. Do you get? I'm just giving you guys that whole idea that this is what an uptrend looks like. Do you understand? So now, like I said, we're looking to buy in an uptrend. The second thing about an uptrend we should actually take note of is the fact that whenever we have an uptrend, before we have a new higher high, price needs to break the last one to the upside. Do you understand? All that whole English just means that if I have a higher high, your price creates a higher high. If I have a higher high, before I can call a new high a higher high, price needs to pass the previous one. That word break just means price needs to pass it. Do you understand? There's no need trying to kill ourselves with English. Do you get? So price needs to pass the previous one to the upside for us to have a higher high. Now, price passing the previous one doesn't just mean price needs to come and pass it. What confirms that whole passing of price is a body of a candlestick needs to actually close above the previous one. So those of you that know what candlesticks look like, you know that candlesticks have bodies and then wicks. So you have bodies and then wicks. One second, let me change that from dotted lines. The normal line. Good. So now this whole body, that's the chubby part of the candlestick, needs to actually pass the previous high to the upside for us to have what? A break to the upside. So now, like I said, that whole word break just means price needs to pass it. Okay, so before having new higher high, price needs to break the previous one to the upside. Now, what confirms that break to the upside is a body of a candlestick closing above the previous high. Do you understand? That's another rule we need to keep at the back of our mind. Now, the second or the third thing now is that in an uptrend, we're actually looking to pay attention to the higher lows. So if you look at this, we have higher lows, higher low, another higher low, and then another higher low. Now, why are we paying attention to these higher lows? The first reason why we're paying attention to the higher lows is that, first of all, that's where we're looking to buy from. So we are not looking to buy from all these ones that have passed. We're looking to buy from whenever we have, who's this now? Whenever we have price creating a higher high, let's say price creates a higher high, what we need to do is wait for price to come back. At the formation of the higher low, now we're looking to jump on buys, and then we're more or less looking to jump on the buys and then basically ride it to the upside. Do you understand? So price creates a higher high, wait for the higher low, the formation of the higher low to basically jump on buys to the upside. That's why we said we're paying attention to the higher lows first. That's where we're looking to buy from. Now, the second reason why we're paying attention to the higher lows is that whenever we have an uptrend, yeah, if you observe, you see that all the higher lows are always forming above the previous one, or it could actually form equal with the previous one. But then in a case where price creates a higher high, price creates a higher high, and then comes back down and then fails to create a new higher low, even if price doesn't create a higher high, but then it comes back down and then fails to create a new higher low, and then breaks the previous one to the downside, then we have a shift in market structure. Do you understand? What does this shift in market structure mean? Oh shit, sorry. That basically means that this is no longer what? An uptrend. Why is it no longer an uptrend? It's not exhibiting characteristics of an uptrend. The whole characteristics of an uptrend is that, oh, higher lows should basically form above or equal to the last one. Do you understand? So in a case where price comes to break the previous one to the downside, then we have a shift in market structure. What that means is that this is no longer an uptrend and we should stop looking for buys. I did not say we should start selling. The thing there is what? We stop looking for buys. Hope you guys are getting the idea of this stuff. So just to recap this year, first of all, an uptrend is a market where price is going, it's a market where price is going up. But then, like we said, price will never move up in a straight line. Price will always move in series of impulsive moves and then retracements. Impulsive moves moves in the direction of the trend, retracements, which short-term moves against the trend. Do you understand? Now, all these impulsive moves and retracements will basically form a series of higher highs and then higher lows. An uptrend is a market we're looking to buy. Before we have a new higher high, price needs to break the previous one to the upside. And then we pay attention to the higher lows. Why? First of all, that's where we're looking to buy from. And whenever price breaks a higher low to the downside, we'll have a shift in market structure, which means it's no longer an uptrend. I should stop looking for buys. So that's more or less the whole idea behind an uptrend. So what we're going to do now is basically jump on our charts and then take a couple of examples. So 1 sec. Let me clear all of this.
I have a question.
Okay.
I have a question.
Okay, I'm listening.
You said that for an uptrend, the price,
yes.
the candle,
yes,
the nini for higher high to be
yes,
broke when in an uptrend,
yes,
higher highs needs to be formed, right?
yes.
Yeah. So now what I'm asking is, for that high to be valid, should it break the previous week or the previous body for it to be, for that higher high to be valid?
Okay, it needs to break the previous week. Now, the previous week is more or less the highest point of the previous high. Do you understand?
Okay.
Yeah.
Yes.
So it needs to break it. The body of the candlestick needs to break the previous week.
Okay, thank you.
You're welcome. So now let's jump on our charts. Let me see. Let me change this. I think we'll have okay, so for a while we've been having a very interesting uptrend on this AUD USD. So now if we look at this, you'd see that I'll start from somewhere around here where price actually broke a high. So from here to here, you'd see that price actually created this high. And then if we look backwards, you see that that high broke above this previous one here. 1 sec. That high broke above this previous one here to the upside. You can see that bodies of candlestick actually closed above the previous high. So we had a higher high. Price came back down, we formed a higher low. Do you understand? Price went back up, we created a higher high. Why? Because we clearly broke above. Price came back down. 1 sec. Price came, oh shit. Price came back down, we created a higher low. Now we created this high. But then now the difference between this high and the rest is the fact that you can clearly see that we did not break above the previous one. Are you guys following? So this is not a higher high. This is more or less like an equal high. After price created that, 1 sec, price came back down, and then we created a higher low. After this, price pushed up, we created this high. Now, this high broke above the previous one, so we have what? A higher high. Price went back down, and then we created this low. Now, this is where it starts getting interesting. Now, watch this. We created this low. This was where price stopped. But then the interesting thing with this low is that in as much as price passed the previous low to the downside, there was no close of a body of a candlestick to the downside. So there was no shift in market structure. There was no break to the downside. So there was no shift in market structure. Are you guys following? Now, after that, price basically pushed up. We pushed up, we created this small high that was not equal to the other one. And then we pushed down first before pushing up to create a new high. Do you understand? One might even consider this whole movement here from here to here as one move to the upside. Do you understand? But then we just want to follow the rules, which means we have to identify this as one high, which is a high that failed to break above the previous one. And then this more or less like a small higher look here, and then a higher high. So we're more or less following all those rules we listed out. Do you get? We're not just going around jumping and then, how will I put it, identifying it based off of our whims. We're more or less following those rules. Those rules are supposed to guide us on what we're supposed to do. Do you understand? So that's it about an uptrend. So the next one we're going to be looking at now is more or less a downtrend. 1 sec. Someone is
very small.
So let's look at the downtrend. So a downtrend is more or less the opposite of an uptrend. Just like the name sounds, it's a market where price is going down overall, a downtrend. But then, like we already established, price will not move in any direction in a straight line. Price will always move in series of impulsive moves. Oh shit. Price will always move in series of impulsive moves and then retracements. Sorry, why I said oh shit was because this whole free zone has started again. We have just 10 minutes left. So let's just continue. So, like I was saying, price will not just move down in a straight line. Price will move in series of impulsive moves and then retracement. What are impulsive moves? Impulsive moves are more or less moves in the direction of the trend. Do you understand? The direction of this trend is what? To the downside. So we would have impulsive move. After that, we'll have what? A retracement. That's a short-term move against the trend. Impulsive retracement. Impulsive retracement. Impulsive. Do you understand? Like that. Now, this series of impulsive moves and retracements basically create a series of lower lows and then lower highs. So we have lower low, and then we have lower highs. Lower low, and then lower high. Let's see. Control 1, 2. Yeah. So lower high, and then lower high. So 1, 2, 3. Lower low, and then another lower low. So we have a series of lower lows. So we have a series of lower lows and then lower high. Just like an uptrend, yeah, there are certain things we need to keep at the back of our mind about an uptrend. The first one being that, sorry, a downtrend. The first one being that a downtrend is a market where we're looking to sell. Do you understand? We're looking to sell in the downtrend. So why? Because price is actually going to the downside. So if I even jump on sells at this point where price starts going to the upside, if this downtrend is going to continue being a downtrend, at some point price is going to come back. But then, like I told you guys, that's not how it's done. Do you understand? I'm just giving you an idea of why we're looking to sell. It's why because price is moving down overall. And whenever we sell, price needs to go down before we make profits. That's the first one. Now, the second one is the fact that before I have a new lower low, price needs to break the previous one to the downside. Like I said before, that whole break just means price needs to pass the last one to the downside. So on how price is coming to the downside, and then price creates a low. Before I confirm that this low is a lower low, price actually needs to break this previous one to the downside. What confirms that whole break of structure, a body of a candlestick needs to close below the previous one to the downside. That's what confirms that whole creation of a new lower low. That's more or less the second thing we're keeping at the back of our mind. The third one is the fact that in a downtrend, we're paying attention to the lower highs. So lower high, and then lower high. Why are we paying attention to the lower highs in a downtrend? First of all, that's where we're looking to sell from. You understand? So whenever price creates a lower low, we gotta wait for price to go back up. One sec. We gotta wait for price to go back up to form the lower high. So at the formation of the lower high, we're looking to jump on the sells to more or less ride price to the downside again. Do you understand? Because it's from there price starting to go down. Whenever we say price needs to go down before we make profits. That's what I was saying. Okay, this lower high should be points where we're looking to sell from. That's the first reason why we're paying attention to the lower highs. Now, the second reason why we're paying attention to the lower highs is because if you observe this whole illustration of a downtrend we have here, you see that all the lower highs are more or less forming below or equal to the last one or equal to the previous one. So in a case where price pushes up, fails to create a new lower high and then breaks the last one to the upside, one sec, and then breaks the last one to the upside, we're going to have a shift in market structure. What does that shift in market structure mean? This is no longer a downtrend. Stop looking for sells. Why? Because price has more or less stopped exhibiting characteristics of a downtrend. That's why I was stopping to look for sells. Like, we're not looking for sells again. Like I said, I did not say you should start buying. I said, stop looking for sells. Do you understand? So just to recap, a downtrend is a market where price is pushing to the downside. We're looking to sell. And then before we have a new lower low, price needs to break the previous one to the downside. What confirms that break is a close of a body of a candlestick below the previous low. Now, we're paying attention to lower highs in a downtrend. Why? First of all, that's where we're looking to sell. And then secondly, whenever price breaks a lower high to the upside, then we have a shift in market structure, which means this is no longer, or at that point, it's no longer a downtrend. We should stop looking for sells. That being said, we jump on our charts to basically take examples of a downtrend. So let's see. Okay, to a certain level, we're having a downtrend on this AUD USD before we started pushing to the upside. So let's look at it together. So because of the size of my screen, I can't really fit all of it inside. So I'm going to shrink it to a certain level. Yeah. So now, if I look at this, you see that price pushed from here to the downside. We created this low. Now, clearly, this low is lower than whatever low we had. That's the last one. This is more or less a lower low. Price pushed up, we created this high here. This high is not above the previous high, so this is a lower high. Price pushed from here to here. We created a lower low. Why? Because you'd see that clearly we broke below this one. So that's a lower low. From here to somewhere around here, we created a lower high. Now, price pushed from here to here, we created this low. Now, why won't I call this low a lower low? Is because it did not break below this previous one here. Do you understand? Now, from here to here, price pushed up and then we created another lower high. And then we created this low. Now, this low clearly broke below the previous one. So we have what? A lower low here. Price pushed back up and then we created a lower high. Price pushed down and then we created this low. Clearly, we can see that this low did not break below the previous one. So this is not a lower low. It's more or less an equal low. Now, after this, price pushed up and then we created this high. This high is more or less what? A lower high. From here to here, we now created another lower low. Do you understand? Price pushed back up and then we created a lower high, clearly. Price pushed down and then you can see that we clearly failed to create a new lower low. Now, from here, price went back up and then created this high. Now, from this high, you can see that this high now broke above the previous high, which more or less indicated what? A shift in market structure. So at that point now, we stop looking for sells. And if you look at this, you see that from that point till now, we're more or less what? Pushing to the upside. Do you get? So it's all these small rules we're actually looking to follow to actually what? Identify all these things. Do you understand? So that's just it. One sec.